So we are joined today by Pramit Pal Chaudhuri. He is the head of the South Asia practice of Eurasia Group and a very well-known senior journalist and a former member of the National Security Advisory Board of Government of India. Welcome to our chat, sir.
Thank you. Good to see you again, Jane.
Thank you, sir. So we are going to break down the ongoing US-China trade war, which is in fact a global trade war. So in your opinion, what it means for A, the global trading system, B, the WTO regime, and 3, for India?
So effectively, what you now have is that the international trading system is starting to come apart, especially, as you mentioned, the World Trade Organization. Because China, in the view of countries like India, definitely, and the United States, has, if not violated the letter of the WTO, it has violated definitely the spirit of the WTO with policies of industrial policies, subsidies, a high degree of protection, especially for services in its own economy. Now we have the United States also joining in and basically arguing we will no longer abide by the WTO rules, and therefore we don't need to. We will have we will effectively have a set of bilateral trading arrangements with the rest of the world. And the present negotiations with India are one element of that. This has been slowly taking place for a while. During the first Trump administration, the Trump administration had declined, had ensured that the WTO's tribunal system, which handles trade disputes, was effectively negated and had become paralyzed. The Biden administration had not changed that policy. That also continued. Now you actually have a situation. So, for example, when America announced reciprocal tariffs, plans for reciprocal tariffs, that is a violation of the WTO. When China announces retaliatory tariffs without going through the tribunal system, that is also a violation of the WTO. And when they are negotiating with India, when we have made offers on tariffs, we have basically indicated we will no longer abide by MFN, most favored nation status, regarding our tariff concessions. In other words, what we concede to the United States will no longer automatically be conceded to other WTO members, which is also a violation of the WTO. So you're seeing countries like us, whether we want to or not, slowly coming to the point that we are violating more and more elements of the WTO. In other words, it is no longer a treaty, it is effectively a guideline, if you wish, for countries. And we will see that spread across the international trading system. So the WTO is a dying organization. And as I've said, it will provide guidance to for government's trade policies, but it will no longer be seen as a treaty obligation on their behalf.
So let us talk about certain immediate aspects. The American stocks have been slumping. How do you explain that?
Sorry, what has been slumping?
The American stocks.
Oh, right.
US stocks.
Yeah. So under the present Trump administration, so as you know, the Trump administration announced reciprocal tariffs initially, and it's changed the policy repeatedly over since the first announcements in March. But at the initial stage, I don't think everybody took it all that seriously. But the announcement that we will initiate reciprocal tariffs, i.e., whatever tariff you have applied against American goods, we will do the same, automatically meant that there was an expectation of a large amount of trade disruption, in other words, and supply chain disruption. So we saw the view, especially in Wall Street and stock markets around the world, that many companies and many global economies would be badly disrupted. Economies are now so deeply integrated that virtually nobody makes anything. The self-reliance, the concept of self-reliance, that really barely exists for almost any product in the world. Textiles are made, underwear is made all across the planet and shipped to other countries, the Western countries. And a simple iPhone or a smartphone is made, the components are made in 20 or 30 countries and brought together and assembled in countries like India. software is distributed all over the planet and so on and so forth. So when you start to say, well, I'm going to impose tariffs, there's an assumption that those supply chains will now be disrupted, and companies that manufacture and ship those products will automatically be unable to do so and lose revenue. So automatically, with an assumption of stock market falling. But there was an additional factor, which is the US-China problem, which is that the most complicated or the most difficult supply chain integration issues are between US and China, the world's two largest economies. And it is reasonably clear that Trump's ultimate goal, and the one country that, of course, he eventually decided not to lower tariffs on, in fact, kept increasing them, would be China. So again, stock markets reacted strongly because in many ways, these two economies are the most important for obvious reasons, but these two are also the ones that are most likely to be affected by supply chain disruption and have secondary effects on other countries. So if China, though Apple is an American company, the iPhone is an American product, a lot of its components are made in China by monopoly producers. In other words, no one else makes them. So even when we in India assemble iPhones, we have to import components from China to do so. So if China and America go head to head, supply chains are disrupted. It makes it increasingly difficult even for India to make iPhones. And Apple is our single largest exporting company. And the same is true for every car company in India, for example, Tata Motors, Mahindra, and so on. They have to import components from different parts of the world. There's an additional financial issue. If you saw in the first Trump administration, when the US and China had a tariff war, then the economies, the currencies of emerging economies like India saw a sharp drop because capital, in cases of in global economic tension, tends to flee emerging economies, goes back to the United States or other parts of the world. So we saw the rupee, the Brazilian currency, and so on drop dramatically in the first administration. Again, in a full-fledged trade war to now, we would probably see the same thing.
If you can explain two other aspects. One, gold prices are rising, then dollar is weakening. How do you explain that?
So the gold price traditionally, when there is a global financial crisis or reasons for a crisis to be on the horizons, when capital markets are scared, you look for a safe haven. Where do you take your money and keep it from falling in value? And gold and the dollar are traditionally the two places you put your money into. So gold prices going up is not a surprise. The more when the US and China are threatening each other, trade wars or currency wars are on the horizon, gold prices would expect it to rise. What I think is unusual this time is dollar prices, as you correctly pointed, have fallen. And this is a sign of one other interesting development in the international economy, is that the dollar it should be said, it hasn't lost what is called its exorbitant privilege in the global economy as the primary international reserve currency, but it is being undermined. That the deficits that America has created, the uncertainty there is now about the US economy and about the credibility of America as the world's largest economy and the guarantor, if you wish, of the international financial system is under severe question. Because you have a president and whose support base and his inner circle, if you wish, argue that the American dollar is overvalued. That one of the reasons, not the only reason, for the deindustrialization of America, the loss of working class jobs in America, is the dollar is too strong. So in many ways, they are all right with the idea of the dollar losing value. So when at least you have that ideological position, plus the sense that the United States government is no longer as credible as it was in terms of its way it handles its economy, you no longer see the dollar as a safe haven. So that has been an unusual development in this crisis, and it indicates a major shift in the world economy or the world's financial structure, that the dollar itself comes under question. It hasn't collapsed or anything, but it is no longer, I mean, in the past, if America had a crisis, like the original global financial crisis that took place during the end of the end of the Bush and the beginning of the Obama administration, the dollar actually strengthened, though America's own financial markets were under stress. In this case, the dollar is being treated more or less like a normal currency.
Let us talk about another safe haven in this context, the treasury bonds. So usually when the stock markets are slumping, so people try to invest in the US treasury bonds. This time you also see a sell-off there. How do you explain that?
That's another, and that sort of goes along with the idea that America is no longer a credible financial player, if you wish. And it was an interesting play. The argument, I believe, is that when Trump decided to refocus solely on China, remember, he went from a policy of reciprocal tariffs to 10% tariffs against any country that had not retaliated, and then focused all of his tariff efforts essentially against China. And we saw China's tariff rate effectively go to over 120%. There seems to be indication that China then, which is the world's largest holder of US Treasury bonds, began dumping bonds, began selling bonds, which immediately began to drive up the bonds. Began to reduce the effective yields of the bonds. And this was a huge problem for America, because if your interest rates are rising, America has huge debts, obviously, because it runs a massive fiscal deficit. And actually, the next, I believe, several months, 6 months, it has an enormous amount of debt it has to pay off. In other words, a lot of bonds have to be realized. So in effect, what China was doing was saying, you may hurt us on the tariffs, but we can hurt you in terms of your ability to repay your debt. In other words, you have to pay a lot more than you wanted. And so the bond markets, the collapse, or not collapse, but the sharp decline in the bond market, or the US bond market, is actually what forced Trump to walk back, if you wish, or begin at least signaling that he was prepared to cut a deal with China. Whatever else about Trump being a real estate developer, he understands how corporate debt and the corporate bond market works. So it was not too hard for his Treasury Secretary to come in and say, look, you've got to realize what you're going to be facing. You're going to be facing an enormous spike in American interest rates and debt payments, which could be quite devastating to your overall budget.
So now we see a phase of escalation between China and the US. Though the Chinese said that they are not going to raise the tariff level anymore, do you see a de-escalation happening anytime soon between the United States and China?
Well, Trump has begun signaling. We saw him saying that she should give me a call. We can work this out. He's begun already saying that I want to come to an agreement with China. The problem that I think they face is, one, this idea that he has that she and he can just give a phone call and start to work things out is not how China works. The Chinese are very structured in how they function because of their culture, that their leadership must not lose face, that a summit meeting or the way leaders work with the Chinese is a summit must be successful by definition. In other words, they prefer a very carefully structured, a traditional diplomatic manner, a bottoms-up approach where junior officers meet and principals meet and negotiate an understanding, so that when the leaders meet at the highest level, everything is already settled. Trump seems to prefer a sort of jugaad way in which the leaders meet and kind of make up their own thing as they go along, which is then later implemented or finessed by juniors. This is something the Chinese do not trust. They've seen how the Trump and Zelensky press conference and summit spiraled out of control. So for them, quite the opposite. They're not prepared to do it the way Trump wants to do it. So the problem is that I think both sides would like to come to an agreement, but they don't know what that agreement would be. But first step is the process. How are you going to do this? So you're going to have to go back to Trump is going to have to go off and send an interlocutor to China. They're going to have to meet at a lower level and begin to outline something, or at least the process by which the two leaders can communicate with each other. And then you've got to work out what exactly is the contours of such a deal. And this is going to be very difficult. Trump is obsessed with the issue of trade deficits. And China's trade surplus with America is something on the scale of $400 billion a year. There is almost nothing China can do to correct that, not even close. There's nothing they can buy from the United States to change that. So how do you get the contours of that deal? And his own team is, for the most part, quite hostile to China on a strategic level. So I can see some degree of communication between the two. I can see potentially some tariff reduction between the two. How do you come to a larger and final settlement? I do not see that at all.
Does it in some way advantage to China? Because the Americans constitute around 17% of their global trade. Chinese have always maintained that there are other markets. They have started reaching out to other groups and countries. So do you think somewhere China will try to reestablish its credential and to try to get better of the United States in this entire issue?
It's impossible it's almost impossible for both sides not to come out badly damaged. For China, it still requires a large number. So China's trying to undergo a massive change of its structure of its economy, which was traditionally driven on exports and internal investment, infrastructure spending and real estate and so on. You can see, deliberately destroying its real estate sector, shifting to trying to create a so-called advanced industrial economy, where the growth driver is no longer infrastructure, which is giving it no returns at all, but move it into quantum computing, green hydrogen, so on and so forth, and become effectively the industrial leader of the 21st century. It's a very ambitious project, but in that transition period, it needs to export to sustain, keep its factories humming and the jobs still to be more or less existent. It has also had to force a lot of companies into bankruptcy, destroy a lot of the household income of Chinese homes who have invested in real estate as their primary asset, but suddenly seeing the value of that real estate drop off. And there's a degree of unemployment. So in this transition period, China is economically and even, you could argue, politically very vulnerable. America is not in great shape either. America has huge deficits. Trump is not is a highly disorganized and should we say, non-strategic government in the way it functions. He's alienated a lot of his allies. So America comes in with a fair amount of weakness on its own. So you have two wounded civilizations, if you wish, heading for a battering. One could argue, yes, China has an incredibly impressive industrial economy. They're really the world leaders in manufacturing things. And as you said, they now export, I think the figures are, they export more to the global south now than they do to the developed world. But they still need the developed world. America is still a huge portion, probably about a quarter, somewhere between 20 to a quarter% of its global exports. Because remember what China has done, even though it has reduced its exports to the United States over the past few years, all it has actually done is transferred Chinese factories and moved into Southeast Asia, to Mexico and other places, and then just used that as a conduit to re-export to the United States. That transshipment policy, it's hard to work out the numbers, but it would seem to indicate that they have not been able to cut their dependence in the United States at all. And if that is the case, it's simply not possible for them to live without the American market, or the transition that they're undergoing will become extremely painful if they get into a genuine trade war with the United States. On the other hand, as we've discussed, America's finances are so weak and in many ways very dependent on China. China can cause damage in the other direction as well. Plus, the large number of American companies continue to make huge profits in China. A lot of their products and supply chains are dependent on China. So the damage to both sides will be considerable. It's very hard to say that one side, it's definitely the case that one side it's impossible for one side to come out unscathed. Both sides will be badly damaged in such a fight. And there would be political repercussions, I suspect, in both countries. I think we had the sense to recognize that this new administration, a second Trump administration, was going to be mercantilist, if you wish, that unlike the first one, this was the real McCoy. This was a true Trump administration, and it would be much more ideological and much more difficult to work with. We also recognized after a while that while Trump may still be, his administration may still see India as a strategic partner in the Indo-Pacific and against China, as well as a technology partner, it divides this from the trade policy. In other words, you don't get an exemption because you're an ally or a strategic partner of the United States on trade policy.
So does this work in the long term, sir? Decoupling trade from other relationship. Does it work with any ally?
So it's going to be interesting to see. So Modi has so the Indian government basically said, okay, let's see what does he want. And as I mentioned, the key, his obsession is trade surpluses. You have to reduce your trade surplus with me. He has this, as I said, mercantilist approach that a trade surplus means you are somehow cheating America or America's seeing, actually, it's not actually true, but he sees it that way. So you have to work out some kind of an agreement with him on that front. India, I think, did the right thing. They said, let's fold this all. Your concerns, not just about tariffs, I mean, your concerns about trade surpluses, but also in America's concern about discriminatory policies by India against US and foreign investors. And that's mainly the digital and regulatory space, e-commerce and so on and so forth. Let's bundle all of that together into a larger bilateral trade agreement, something that the first Trump administration had also been interested in doing, but COVID came in the way and nothing happened. And I think that's the right approach, that you fold it into the larger trade agreement, which makes sense for India. The United States is by far our largest economic partner. It is our largest source of FDI, our largest source of FII, our largest source of remittances, our primary technology partner. Everything about our economy now increasingly is American-oriented. So therefore, to come to a bilateral trade agreement provides a great degree of stability, and in my view, in the long term, will be a boost to our economy because it will restore or boost foreign investor confidence in our country. So in many ways, it's something we should have done a while ago. Now we have a president who's interested. So you bundle all of that together, and this allows you to, if you wish, to work out cross deals between the two. Indian government also came in with, I think, a rather sensible and radical view by Indian standards of a zero tariff agreement. In other words, for 70% of industrial or manufactured good imports and exports, India would say that you take a zero tariff, we'll take a zero tariff. And we saw a large number of Indian industries come out and say, we can live with this. Auto components, textiles, pharmaceuticals, jewelry, all saying, yes, we are capable. And this, I think, is one of the interesting things that this indicates. Against America and possibly against Europe, India is now competitive in manufacturing in almost all these sectors. We can take on the Americans. We don't have to worry about their exports to us. It is only in the agricultural sector that India said we still need some protection. And that's the 30% that was not covered. And so that's where at the tariff battle, that's going to be the fundamental core of the negotiating process that we have right now. What India was concerned about was that if we give zero tariffs to America, under the WTO, we'd have to give it to China as well, which we are not competitive with. But if the WTO doesn't matter, as I've mentioned, then it's fine. We give America zero, but we do not give that to China. In fact, quite the opposite, may actually increase our tariffs. So therefore, This is now working out quite nicely in many ways for India. We are ahead of the pack, and most every other country that is now rushing in is doing exactly what we are doing, conceding a group of tariff cuts on US products, then offering a broader bilateral trade, or at least some sort of a trade understanding in which both sides would accept very savage tariff reductions and also address non-trade barriers like the standards that I've mentioned. So you now have, I think the White House recently said like 15, at least 15 countries have come in with very comprehensive agreements. Now, Bangladesh, in our region, Bangladesh, Sri Lanka, and Pakistan have all got hit by tariffs, although again, those have been reduced to 10%. Their primary export to the United States in almost every single case is textiles and apparels, clothing, and so on. And the tariff rates that they've been hit with originally were quite high, much higher than they were against India. Let's see how that works out. The 10% is not going to hurt them too much. But I think the real problem for them is that given that they are reasonably small and don't really factor in any strategic way in the United States, if over 150 countries or so have offered to work out a bilateral trade understanding negotiations with America, how far down in the queue are they? In that case, if I'm Bangladesh, I have 40% of my exports to the United States. I'm still going to get hit with a 10% tariff. I can probably live with that, but probably have to devalue the taka, my currency, a little bit, or devalue a little as a consequence. More importantly, unless I have a trade agreement, a lot of the companies, the big retail firms and so on, which use me as a source for apparel and so on, will say, until you have a tariff agreement with America, I can't trust you. I can't book a 1-year contract, or in the summertime when I'm buying my winter clothing from you, for example, you normally do it 6 months in advance. I don't know if you're not going to hit by tariffs. So I will go look for some other country that might have a better deal, or I will diversify my supply chain. That is a problem that smaller countries are going to face. That when does America give us a deal, or when can we negotiate, is not at all clear. They've all written to Trump. In some cases, it's not even clear that I don't believe Trump has responded to any of them. They just, the State Department sent a sort of standard letter, we have received your request, blah, blah, blah. But if you've got over 100 countries all coming in at the same time, there's only the US Trade Representative Office is like 250 people. They simply are not going to be able to negotiate everybody simultaneously. So you may take 6 months to 1 year before the Americans get around to actually dealing with you. That is the problem I think these kind of smaller countries will face as a consequence of this tariff uncertainty, if you wish.
Thank you, sir. Thank you so much for your time.
Thank you.
Thank you, sir.